This is BankCents, the podcast that makes sense of all things banking. If there's something you don't understand about banking or finances, you're not alone. Our industry experts are bringing you informative and enjoyable conversations that break down bank jargon and dive into hot-button financial topics. And now, BOS, a community bank located across Illinois and Missouri, presents BankCents. Here's your host, Gregory Morantz.
Hello, and welcome back to BankCents, the podcast that makes sense of all things banking. On today's episode, I'm excited to talk to you about estate planning and some of the recent changes that have occurred with some recent legislation. To talk about this topic today, I have Greg Pettis on with us. He's a Vice President of Advanced Markets here in Springfield. And we're lucky enough to have Greg on for actually the fourth time.
I think that's right.
We've had you on for a few different episodes talking about financial planning in your 20s, in your 30s, in your 40s. So we're excited to have you back on. Before we dive into the topic today, can you give our listeners a little bit of background about your expertise and then how long you've been at the bank?
Sure. I've been in the business about, 3 decades. So worked a lot with attorneys and CPAs to help customers with their life plans, not just investing, but some of those major questions about when should I take money? How should I? With what assets should I retire with? And what legacy do I want to leave? And timing on these types of life events. So I help put together written fee-based plans for the bank.
Yeah,
We've been here about 4 years.
Yeah. And we're lucky to have you. And I think you're the perfect person to come on and talk about this topic today. And as you mentioned, you've been doing this for a little bit. So you've seen a lot of changes in the legislation that have occurred.
Been busy recently with the laws that, the one big beautiful bill, or HR1, whichever you want to call it.
Yeah. And so that brings us right into our first topic. We've seen some changes with regards to estate planning. Can you give our listeners a little bit of a background on what has changed and some things they should keep an eye out for?
Well, we got certainty from the federal estate regime, but that means that, we can each leave up to $15 million to anyone without any federal estate tax. That's both federal, estate, and gift tax, lifetime and at death. However, what really concerns me is that we still have the state of Illinois threshold for the state estate tax at $4 million. And so there needs to be creative planning still, even with an estate that's not going to be near the 15 or double that 30 million, but with a couple threshold, in order to, shelter the future legacy from the state of Illinois state estate tax.
Yeah. And I think that's one of the things, a lot of these topics that when it comes to estate planning might not apply to all our listeners, but the whole idea behind it is planning for your future.
Exactly, Greg. Everyone has an estate.
Yep.
Whether you're a young couple just starting out and you're having children, there's such an importance of having a guardian appointed for the young children, having your wills in place. Without a will in Illinois, the state of Illinois has one for you, and it may not be anything like what a couple would want. So everyone should have some estate plan work.
Yeah, and that's one thing I want to make sure we communicate to our listeners. While some of this we're going to be talking about estate planning at different thresholds, if you put away in your 401k or your IRAs like you're supposed to, and you do invest it in the right way, it could grow up to that $4 million quicker than you might expect.
For sure.
So even if you think this might not pertain to you, it's something to have in mind for your planning for your future.
And even some of our farmers, with let's say 300 or 400 acres and a little CD here or there, an IRA, they're over $4 million, and it's so important to do some planning at that point, or if you think you're going to be at that point, especially.
Yeah, and one of the other points I want to keep harping on throughout this podcast is your estate plan and your will and all this information. We've mentioned it in the previous podcast that we've done together. They're living, breathing things. They're going to be ever-changing, so you have to keep an eye on it and keep updated as much as you can.
The law changes every so often, and plus life changes, births, marriage, death, divorce, whatever. It's time to review those documents about every 3 or 4 years, I would say.
Yeah. So let's jump into another topic. When you're thinking about estate planning and planning for your future and thinking about your descendants and all that, and that's annual gifting strategies.
It's an opportunity for couples, for business owners, for anyone to gift now up to $19,000 per year per recipient, and that's indexed to inflation. So that number will keep going. So $19,000 for any amount of recipients. That can be done with a couple can combine their 19,000s into 38,000, and it doesn't matter whose account it comes from. And the recipient doesn't have any income tax on that. So it's a great way to keep your estate down and to help, the recipient, the donee, so to speak, to enjoy the gift, help them with wisdom on how to guide them in that, the usage of it, and instead of just leaving it all at the end.
Yeah. And that's one thing, to keep in mind too. Somebody might ask, okay, well, if I gift my child, a down payment to buy a house, and say that's $40,000, so it's over the $19,000 limit, what exactly happens in that scenario?
So the first $19,000 is your annual gift exclusion. Anything over that, you can utilize your larger, I call coupon, the federal $15 million now exemption. So you would then file a 709 and to keep track of all your lifetime gifts.
Yeah.
And then you at the end you would have some of that remaining, perhaps.
Yeah. And that 709, it's called a gift tax return.
It is, yes.
And I think the big thing there is that's why you want to stay under that $19,000, so you don't have to worry about filing that.
Yes, that's for sure. And it's interesting how you can take gifts of property that can be discounted legally. So let's say you have farm ground, or it's wrapped in an LLC, or you have a business with a family closely held business. You can call, let's say, 30,000 19, maybe 25,000. You can call it 19, with IRS guidelines allowing you to discount the gift value by 25 to 40%. 40 is probably on the aggressive side, but that way you can take a gift and with a minority interest discount or a lack of marketability discount, get it to your loved ones quicker. That way acreage or businesses or shares can be wrapped in an LLC, and then gifts can be made that way.
Yeah, and I think that's another important item that we should discuss briefly, is that what works for me may not work for you and your family and your business. So maybe it makes sense to do gifts now, or maybe it makes sense to wait till an event happens that
exactly, Greg. This is why we advocate sitting down and having a comprehensive financial plan here at BOS, Advanced Planning Department, because not everyone has the similar circumstances. In fact, like you say, almost every situation is unique. And we want to make sure that we customize, and we do that with maybe 150 to 250 pages of work that takes all their different pieces of the puzzle and wraps it together in one cohesive, holistic plan.
Yeah, and that's huge too. And I think we've talked about it in other episodes with other guests as well, is that how unique everyone's circumstances are.
For sure.
And one of the most unique circumstances is if you own a business.
Yeah.
And for business owners. And so if you're a business owner and you're thinking about estate planning, what are some of the things you should keep in mind or potentially even, do here in the near future?
That's a great question, and I'm excited that we have new tools here at the BOS Advanced Planning. The cornerstone of a succession plan, of an exit plan, if you will, for a business owner is, hey, what is my business worth? And though over 3/4 of business owners say they're going to pull equity from their business to help them retire, 90% of them really don't know what it's worth. So we now have a tool here at the BOS Advanced Planning Department to help with business valuation estimates. So that would be a part of our overall business planning that we can offer as a menu. And that's an exciting, like I say, cornerstone to the succession plan. Yeah,
and I'm not overly familiar with the product, but from what I've understood is that it's a quick, easy way to get a valuation, so you have a general idea. You may still want to get a more formal evaluation at some point.
Exactly, Greg. We can get within 3 to 5% of, let's say, of a more expensive version of business valuation, and we do it with a couple, 2 or 3 years of business tax returns, with financial statements, and just about a half-hour conversation with the business owner about growth projections, EBITDA margin projections, customer concentration, and the reliance of the business on the owner, those kinds of intangibles.
Sure.
But we've done some sample cases, and we've come within 1% of perfection, I think you'd say.
Yeah.
And we're excited about that. It's going to be a real plus. That's our business valuation estimates.
Nice. And as you mentioned, that's when you're looking at the whole picture. If you're a business owner, that's a big part of your picture.
It is. It's huge.
And so you have to look at it all when you're doing your estate plan.
Yeah, and not just for loans, but also, hey, an estate plan has to know what's the value of my business. If I'm going to be gifting, how much am I gifting? If I'm trying to be fair with children in a legacy, one child's in the business, 2 or 3 children aren't. What does fair mean? Well, let's find out how much the business is worth. Unfortunately, divorces happen. People come to us and say, hey, I'm going through a divorce. What's my business worth? Well, now we can really help them.
Yeah. And some tough, tricky conversations, but they're conversations that need to happen.
Yeah.
Yeah. Well, before we wrap up, I kind of just wanted to open up to you. Do you have any other, trends or tidbits you'd like to pass on to our listeners that you're seeing with current estate planning or different gifting strategies, or just something small that maybe they can, learn a little bit from?
Well, one thing that I would point out is that though the larger federal exemption is portable between husbands and wives, married couples, the state of Illinois' $4 million exemption is not portable. So it's important, again, to see a qualified estate planning attorney so you get those trusts to shelter those $4 million credits in order to keep it from becoming a problem at the second spouse's death. Also, we do a lot of work with blended families. So, his children, her children, our children, second, third marriages. What did we mean when we said I do about the business? We promised it to biological children from a previous marriage. Now what? We signed a prenup. Now we've come into an inheritance. Now what? These are issues that your traditional family units, have standard solutions. But for a blended family, there's a lot of customized work that we do.
Yeah, and I think that's a perfect example of how every situation, as we said, is just so different.
For sure, especially
and
blended
so
families.
The best thing our listeners can do is, as you're preparing for your financial future, talk to a professional, whether it's us or it's anybody.
Yes.
Talk to them.
Yes.
Get that knowledge base and really understand what your unique situation is, so you can best plan for your future.
For sure.
Greg, thanks again for coming on today. We
Sure.
really appreciate you taking time out of your busy schedule to help pass along this information to our listeners.
My pleasure. Thank you.
It's very valuable. It can be very complicated at times. So please, once again, if you have questions, reach out to us. Reach out to a trained professional that is used to these situations that can really help educate you on it. It's really important for your financial future to keep in mind all these different nuances that may occur. So as always, thanks for listening to the BankCents podcast, the podcast that makes sense of all things banking. Until next time.
Is there something about banking that doesn't make sense to you? Submit your questions to us on Instagram Messenger or by email, bankcents@bankwithbos.com. Or if you're watching this on YouTube, comment below. We're happy to give you our 2 cents on a wide range of topics. Thank you for listening on Spotify, YouTube, or wherever you get your podcasts. And please leave us a 5-star rating and review so we can continue to bring you more educational content. Thank you for listening, and we hope you join us on the next episode of BankCents. Securities and advisory services are offered through LPL Financial, LPL, a registered investment advisor and broker-dealer, member of FINRA and SIPC. Insurance products are offered through LPL or its licensed affiliates. Bank of Springfield and BOS Investment Services are not registered as a broker-dealer or investment advisor. Registered representatives of LPL offer products and services using BOS Investment Services and may also be employees of the Bank of Springfield. These products and services are being offered through LPL or its affiliates, which are separate entities from and not affiliates of Bank of Springfield or BOS Investment Services. Securities and insurance offered through LPL or its affiliates are not insured by the FDIC or any other government agency, not bank guaranteed, not bank deposits or obligations, and may lose value.